Good morning, traders and investors. My name is 𝗧𝗴𝗀, and I'm the senior strategist for �wealthPress. Today is Monday, the 21st of June. It is actually the first day of, I think, the fourth week. I think it's the first day of the fourth week of June, believe it or not. Now, the markets are up strong, and I'm going to tell you, it's anything but random. The Dow's up almost 200 points between 162 and 200, depends on what month you look at. The Nasdaq is screaming up, even the S&P 500, and I believe the market's going to make a big comeback this week from last week. I think this is going to be a big bounce week, and let me explain to you why. The bond market looks like it's getting really toppy, and if the bond market continues going higher, that means rates are going to go lower, and I think they're already going as low as they're going to go, and I think that the fact that the Fed is going to take action earlier is going to bite into the bond market, and the bond market is going to go lower, and rates are going to go higher, which is going to be bullish for non-tech stocks. And as you can see here, tech stocks made an all-time high 2 days ago and have been coming off, while S&P stocks are now under the 50-day moving average. But, and boy, oh boy, I was on this. Look at momentum levels. We went from 90% of stocks trading above the 50-day moving average to 30%. And I think we're pretty done to a washout at this point. This is what I was expecting in the medium short term, and I think it's pretty much done. We may get a little more huffing and puffing, but the truth of the matter is I'm pretty satisfied with these momentum levels in the short-term trend. So I think we're going to see more upside in the SPY, and I think all the stocks like energy, financial, basic materials are going to be transports, they're going to be higher, and the Nasdaq stocks are going to go slightly lower because interest rate sensitivity is going to increase again. Remember, bonds going lower, they're already lower this morning. Bonds going lower, higher rates, good for transports, basic materials, energy, inflationary stocks, basic materials, but not for tech stocks. So expect tech to start cooling off and SPY to start moving above the 50-day moving average again. Now, we've got a lot of news this week, but we've got one report that's bigger than all of them put together, and that's the GDP. Now, we've got the jobless claims, we've got personal income, the monthly, but the big report is going to be the quarterly GDP, and we can expect a subdued market heading into it. So expect somewhat of a quiet market Wednesday afternoon. The expectation's about 6.5%. If we're in that ballpark, it should be very good for the economy, and it's going to tell us that the economy is humming along pretty well. And the Fed is going to say, we told you so. If the economy is moving too hot, if it's like at 7%, well, the Fed's got some explaining to do. And if it's on the 5%, well, the Fed will say, we just keep pushing bonds. So the GDP is going to be very instrumental. If it's too hot, they may say, we told you we got to cool off. And if it's too low, they may say, well, we may continue driving the bond market. So too strong is negative and too weak is positive because of where we're positioned right now. Because Feds put themselves in a corner by lowering rates almost nothing about a year and a half ago. And I told you that's what they were doing, but nobody ever listens to anything I say anyway. The bottom line is, now let's talk about global markets so you can kind of see what's going on and what's cooking around the country and around the world. Investors are still mulling over the Federal Reserve's signal that it may raise current ultra-low rates sooner than expected, slowing its support for the bond market. Part of the Fed's decision is to keep price under control. The fear is the inflation may prompt central banks to dial back the lavish support that has lifted markets to new highs after they plunged at the onset of the COVID pandemic last year. It's not going to be an exact science, folks, but we'll get there. But not enough support, too much support, they'll dial it up right. It'll just take a little time. Everything we're seeing right now is just more of a bounce and a reaction from what we saw in March and April of last year. Remember what I told you during COVID? The market is setting itself up right now for the next few years. So that's what the COVID did. It really changed the dynamic of the market, but not in a bad way for us, just in a different way. Markets were spooked after Federal Chairman James Bullard said CNBC he expects first rate increase may come as soon as next year. So they're definitely changing their tune. Remember what they said 6 months ago? We're not going to take any action until the end of 2023. It's like, stop making these wild predictions, man. The Fed also began talk about slowing its $120 billion of monthly bond purchases, which are helping to keep mortgages and other longer-term borrowing cheap. But the Fed chair said such tapering is still likely away. Yeah, he keeps talking. Stock market reacted. The U.S. stock market remains relatively close to the record highs. The S&P is only about 2% below its all-time highs, and the Dow is within 5%. And remember what I told you. Momentum levels were at 90. We had 93% of stocks trading above the 50-day moving average, and now we have only 30%. And now it's not really reflecting yet. The market should be somewhere like right here, in my opinion, but it's still here because you have a few large cap stocks that have a lot of say in the market, like the FANG stocks, pulling the market higher, and they have a lot of market cap. And the S&P 500 does have the Amazons, the Apple, the Microsoft, the Facebook, the Nvidia. Those stocks have a huge market cap, and that's what's driving the market. So there's a little misrepresentation of how low the stocks is. But I believe we're going to bounce back up. The RSI is grossly oversold. Now we're at 34, not grossly oversold, but we're at 30 now. The put to call ratio is, let's look at the put to call ratio actually. I'm on the wrong, that's a good point. Let's look at the put to call ratio. It should be pretty oversold right now. No, not really. It's at 90. It went to 97. Look for it to go a little higher. So the market could theoretically go a little lower, but I think we're getting pretty close to a bounce back to the other side. And again, the put to call ratio and number of stocks trading below or above the 50-day moving average. If anything, we may come down a little more, but the worst, I think, the worst is behind us. And as far as the QQQ, I think the QQQ is going to start cooling off. And I think let's look at momentum levels on the Nasdaq right now, real quick. Probably a good thing to look at while we're already here. Let's see here. Yeah, according to the momentum levels, we should be lower right now. Look at that. We went from, remember this date, 4/15, 87 stocks out of 100 were trading above the 50-day moving average. And now we have 50. So 87, 50, and that was how long ago? 4/15. Let's look at QQQ. 4/15. We're pretty close to where we are right now. Not too far. All right. Well, 80 something. 80, what was the number? 87 out of 100 stocks were trading above the 50-day moving average when we were here. And right now we're higher, and you have 50%. So right now, according to momentum levels, we should be square at the 50-day moving average, below the price we were on 4/15. So we are in an overbought market, and we got literally like, let me show you like Nvidia right now. Look how strong it is, or at least it was last week. Look at this. Look at this thing. Topping out. Look at Google. These stocks are causing a handful of stocks to go up, but the truth is, if you look at momentum levels, on the Nasdaq 100, only 50% are bullish right now. So Nasdaq should cool off a little bit. SPY should come up, and that means all the stocks that have been cooling off, like the basic materials, industrial, financial, and energy stocks, basic materials, energy, they're kind of tied in together, should be going higher. And because of that, I've got 3 hot stocks for you that are on my radar right now. Schlumberger. What does Schlumberger do? Look at that, 50-day moving average. RSI is right there, still above the 50-day moving average. Look at the profile of the stock. Oil energies, 55% one-year return. It's a great stock. Right now, this is a good stock, and I think it's way overdone. Next one, Simon Property Group. This is a REIT that buys commercial property. COVID is ending, and the world is opening back up. RSI is in the 30s. We're near the 50-day moving average. We've had several days of selling off. I think we're there right now. Lastly, Discover Financial, consumer credit card. I love this company, and I like it a lot right now. RSI overdone, near the 50-day moving average. Swing high, what's not to love? 3 stocks that I'm loving right now. Schlumberger, SLB, Simon Property Group, SPG, and Discover Financial. Now, I've got something even more exciting for you. Folks, legendary trader Tom Busby, he just discovered something shocking about the stock market. He found a little-known pattern that occurs every Tuesday at 9:30 in the morning, Eastern Time. Can you imagine that? Holy moly, this is big. And traders who catch on to this could find themselves in the driver's seat for the easiest 4-day gains they've ever seen. Remember this: in on Tuesday, out on Friday. In on Tuesday, out on Friday. Now, Tom has kept the strategy to himself for a year. He wanted to make sure it worked. Can you blame the guy? But now he's taken it public, and he's been able to prove his theory on real money trades with gains like 90% on Riot, 122% on Moderna. Folks, he's ready to go public. Matter of fact, last week, I think 3 out of 4 trades were winners. I mean, he's killing it. Let's just say that. Are you ready to find out how everyday traders like you, just like you, can enjoy long weekends without having to worry about what will happen on Monday? Play golf on Monday. Your weekend will start on Friday night and go all the way through Tuesday morning. Folks, retail investors like you stand to benefit the most. Are you ready to find out how you can enjoy long weekends without worrying about what happens on Monday? I hope so. Follow the link below. Get in on this now. Don't delay. And make sure to like this video. Subscribe to this channel if you're watching on YouTube. Folks, let me level with you. You got to stay one step ahead of the market. And you can do that by following and subscribing to my videos. I hope you have an amazing day. Have a great week. And watch out for a little cool off in the Nasdaq and a little upside, a little bounce in the basic materials, energy, industrial, and real estate. Have a great day. Bye.